Good morning, traders. Welcome to Wednesday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to check the news so that we know what's going on, as well as anything else that may be moving the markets around. So looking at the news for today, there's just a lot of news today. The big news announcement at 8:15, ADP non-farm employment change for January. Forecast is 49,000. We've got some medium news announcements at 9:45. And then 10 o'clock, the next batch of medium and large news announcements. Medium, ISM non-manufacturing employment, and then the large, which is the manufacturing PMI for January. It is Wednesday, so we also have the crude oil inventories at 10:30. Those are forecasted at 0.446 million. The previous is negative 9.9. We'll also take a look at the API and see how that relates to the inventories for today. Aside from that, though, later this afternoon, we have some FOMC members speaking with Bullard at 1300, Harker at 1400, Chicago Fed President Evans speaking at 1700, as well as FOMC member Mester. And then at 1805, we have Kaplan speaking. So a lot of speakers, but realistically, not much else going on in the afternoon. So looking at the inventories here, the forecast for today, 0.446 million. If we go back to yesterday and we look at the API, that came out at a negative 4.261 million. So looking at what the API is saying compared to what the inventories are saying, there's a little bit of a difference. It appears as though this number, this positive 0.446, is likely going to get dragged down into the negative. So I'm not necessarily expecting a bearish number today. Crude oil looks more likely to be a bullish number today, if anything else. But that's really about it. So with all that stuff out of the way, now we can jump into some charts for today. Today being 2/3 of 2021. First on the list is going to be the NASDAQ with a very nice looking ascending wedge to the upside. And not only an ascending wedge, but this thing has gone just straight parabolic to the upside. Initially started with a gap down, the run lower, and then that was it. That was the last time the bears even thought about trying anything, because after that it just went straight up. We broke above major swing highs. It is proving that we have a major transition, not just some of these smaller ones, but the big swings as well. So we do have a full trend shift. That was proven and proven again with that larger break. So now with this big continuation to the upside, we have a full flip or a failed flip, where the sellers tried getting the move back down and they obviously got dumpstered along the way. And now they're going to be looking to average out, get out, minimize the damage, etc. So that first pullback to an L1 or a little bit lower to fill in some of the volume at the 13,300s, that's going to be the big zone of interest, with the market pulling back for buyers, at least to try to kick the market back up. On the S&P, we have a very similar situation, obviously, but the ascending wedge is, well, it's a bit more sideways. The reversal off of the lows was strong, but on the NASDAQ, we saw it breaking above with some serious aggression past some major swings, which the S&P does also have, but it hasn't really cleared that big one by much. The NASDAQ got way above it. The S&P's just kind of stuck. So there is a chance that we get an L1 pullback after this break to the upside, but noting the complications, if you will, of the buyers trying to get a rally up, if it does want to pull back a little bit further, it wouldn't necessarily hurt my feelings to see an L2 back at some of that support around 3780, where buyers can then retry. If it does want to pull back a little bit further, there was a big volume miss at 3750, and I mean, realistically, this whole move up, it's likely that buyers are going to be all over the place. It's more just a matter of waiting for the bottom to get put in and then trying to pick it up from there. Gold showing, well, once again, more sideways action. Not really much of a change here on gold with this with the sideways consolidation, but we did have a failure at the highs. There was a huge amount of accumulation up here. You can see how long it stayed up there, and then finally rolled back over. With that roll back over, that is, I mean, basically a double top. I do think it made it just a little bit higher, but then into a major lower high and then just got pummeled. Buyers are defending the L4 on the way down, and realistically, there's a lot of structural support there, so of course they are. But if it does start breaking down through these 1825s, 1820s, sure, there's an L5 way down there, but I mean, if it starts breaking down below that, there's not really much from a structural perspective to hold it up anymore, and we'll likely just see it want to slide through. 1821 is going to be the big level, though. Now, that previous major swing, it's got to make it through those 1821s, 1820s for proof on the sell side, and then they've got 1800. So the seller's got a lot of stuff in the way, but bulls aren't showing up yet, so they're obviously waiting for some cheaper prices. Then over on crude oil with the explosive rally to the upside, now breaking into the 55s. Seeing a bit of consolidation up here in the $55 range, not a big surprise. $50 and the $55 range. It really anywhere from the 50s and then 55 and then 45, kind of those $5 ranges above and below, have a huge amount of support and resistance. And there's a few, sub levels inside of there if you're looking at the dollar value. But this is kind of the zone, and we're back up to the upper range. It's been a few years since we've really kind of played around with this area and stayed here for a while. But, realistically, if the buyers are going to kick this back up, we're in a major zone. We're forming a nice little wedge formation. Quick little breakdown into support would be a great location for those buyers to kick it back up and maybe even start revisiting into those 60s. The euro continues to grind down with a nice ascending wedge, and you can draw this up a couple different ways. There is the wider one utilizing the swing back from the 27th, but you could also draw this as more of a channel. Either way, it gives us kind of the same picture. The bears are still trying to drive the market back to the downside, and well, so far, if the bulls are trying, all they're doing is accumulating because they're not really putting in much of a bounce. And it's getting hard to not see that 1.2 gigantic level that's sitting underneath the current market. Just sort of waiting. It's kind of waiting there to get that tap. So the 1.2 area, big zone of interest. Obviously, there's a lot of bullishness coming in at these lows. We do have some MACD divergences across all of these bottoms. But until we get a trend shift, a reversal, something to prove that the sellers are out of the way, then they're just going to keep on selling. Then over to the cryptocurrency side of things with Bitcoin continuing to wedge, but we are seeing the bulls still prop the market up and drive things higher. The big thing that stands out here is that we're still kind of stuck inside that big bull jump, and it hasn't really gotten above or below that, right? That giant rally from the 29th. It made it down to the lows, and now we're kind of coming back up to the highs, but we haven't really broken above or below this area yet. So until that happens, still just kind of sitting on hands and waiting. Bitcoin is at the top of the potential wedge, but this is a brand new wedge. These highs are unconfirmed and need a bit more information. That said, this whole area is a zone of interest, and with this aggression to the upside, eventually you see that aggression fail. It gets out of the way, and buyers buy the slightly larger dip. The bottom of the wedge seems like a perfect spot for that. With all this continuation to the upside, if the buyers do want to ramp back up, we have L5 resistance at 37,400s up to 38,000. And if they're able to get through that, then it's back on up towards 40K. And then finally, over on Ethereum, we've got some nice bullish continuation to the upside. Not quite a channel, still an ascending wedge, but you can see there's a really good amount of bullishness kicking the market higher here. There was that tighter ascent, it wasn't really ascending, I guess. It was mostly just a wedge. The point ended flat in the middle there. But we finally broke above that. And with that breakout above the highs and with a completion of a two-leg move back up, showing and demonstrating that buyers do still have the strength here, there's going to be a lot of buyers who are looking to buy that pullback. We broke out of that smaller wedge, breakout pullback. You can see them lining up really nicely, and not to mention 1400. Previous structural support resistance. We've got the previous wedges support, rising channel support, and an L2. That's a lot of things stacking up in the same place. So a pullback is definitely favored right now, although it doesn't have to. But a lot of buyers would love to see a dip back into those 1400s to reaccumulate again. All right, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. I hope you have a fantastic trading day today, and we will see you all in the room or the next one. Thanks.